And we are live on Facebook one more time, folks. Happy Thursday. It's September. September already, Mario.
September.
Where has the year gone?
Flown by.
September, folks. We're at the One Stop Shop Happy Hour. My name is Andy in South Florida. We're here with Mario Quintero, Mr. One Stop Shop, original One Stop Shop. And Mario, we've been doing this for a while now, and we've accumulated numerous questions and numerous comments by people, and you had a great idea to go ahead and do the open line Thursday one more time. We don't do this very often, but we want to address different topics and different conversations. So today you're getting a buffet of information from Mr. One Stop Shop, clear to close. We usually trend on a topic, real estate, mortgages. Today Mario wants to offer you a buffet of information. So listen up, folks, stay tuned. Share this broadcast below, share the love, and we'll get right on going. So Mario, interest rates, how are they doing? 20% down payment versus 3 to 5%. What is all that about?
So obviously in the news you hear a lot about interest rates dropping, and I won't give you a specific rate because then legally I have to give you an APR. So we'll just talk in ranges. So interest rates right now, if you're giving 20% down, they're somewhere below 4%.
Wow.
Somewhere between 3.5 and 3.8, let's say, with 20% down. If you are giving anything less than 20% down, 15% down, 10% down, 5% down, 3% down, don't expect those rates. They're going to be higher than what you're hearing out on the street, because the other rates that are less than 20% down require mortgage insurance. The mortgage insurance is either paid by the lender or it's paid by the borrower. And because you have to insure the loan when it's less than 20% down, the cost of the rate goes up, and the cost of the MIP and other factors increase.
Wow. So all those companies saying, hey, you could buy with zero money down, buy this, buy that, they don't really tell you the fine print.
Just make sure you get all the information in writing up front. That's all. Very
important. Folks, we're live with Mario Quintero, the One Stop Shop. If you have any questions, please type them in the comments below. If you're watching us on the replay after the live broadcast, type the questions as well. We value your comments. Mario is very active. Mario will answer any questions that you may have. I want to welcome everybody that's tuning into our broadcast. Happy Thursday. Mario, another question. Why do I need to get a second appraisal on an FHA loan?
So if anyone out there is involved in an FHA loan, whether a conventional loan or a reverse mortgage, in October of 2018, FHA announced a new rule that they have the option during the underwriting process to request a second appraisal if they want to. We've been lucky enough in the last couple of months to have 3 loans that have requested a second appraisal.
This is that random.
They say it's at random. We feel like we're being picked on at this point. I mean, because 3 loans in a row at random is, I'm going to start playing lotto pretty soon. But if that happens to you, just be aware that that's an FHA rule. It is a HUD rule, and it's supposed to be picked at random. So don't be surprised if you're involved in an FHA loan, if after you're almost finished with the process, your lender calls you and say, guess what, we need to do a second appraisal. And then that appraisal will weigh heavily against the first appraisal.
Wow. The ever-changing world of real estate.
It's crazy, man. It's crazy.
Ever-changing, and we'll talk about that later on, but if there's one thing there, it's constant change, and you got to go with the flow.
Yep.
We have another question. What is a non-QM loan, and how do you qualify?
So non-QM loans are conventional loan products, which are not under the Fannie Mae guidelines. And what happens is a lot of times we have borrowers that their income tax returns have a lot of write-offs, and their income is not sufficient on their tax returns to qualify for the amount of loan that they want to qualify for. So the option of a non-QM loan is to secure 12 to 24 months bank statements reflecting the actual income that is coming into their accounts. We average out that income and don't even use the tax returns.
Interesting.
Couple of the things that with the non-QM loans, they're very efficient, they work very well, the interest rates are higher than a conventional loan, and also there might be origination points involved, because usually the lenders pay us. On the non-QM loan, the borrower will pay us. So those are some of the differences.
So folks, want to welcome you to today's broadcast. If it's your first time watching, my name is Andy within South Florida. We're here with Mario Quintero from the One Stop Shop, Mr. Clear to Close. And we come to you every Thursday, on the Thursday at the 4 o'clock hour. And we bring to you tons of information on the real estate market, on the mortgage market. If it's the first time watching, I want to invite you to check out marioshomenews.com. That's marioshomenews.com. There's a wealth of information in there, a wealth of video broadcasts, client testimonials, videos that Mario has produced. If you want to know anything and everything about the South Florida, or Florida, because actually you practice in all Florida, real estate market and the mortgage market, there's one place to go. marioshomenews.com. Check out the website. And if you're first time watching us, we welcome you to share and leave your comments below. Mario, this goes to all the spouses out there. How does the non-borrowing spouse rule work in a reverse mortgage? That sounds complicated.
It's a little complicated.
It sounds complicated,
and it needs to be understood. In order to do a reverse mortgage, if it's a married couple, at least one should be 62 years old. If one of them is less than 62 years old, then they become what is called the non-borrowing spouse. Their age of the younger borrower is what is used to calculate the benefit that they're going to receive from a reverse mortgage, even though the older spouse, which is over 62, will be acting as the borrower with the age of the non-borrowing spouse. What does that mean? Well, what that means is that the actual borrower, the older person, we have to pass what is called financial assessment with their income. And we can't utilize the income of the non-borrowing spouse. The non-borrowing spouse has to sign an affidavit during the paperwork that they fully understand that they're not going to be part of the loan and they will be coming off the title of the loan. However, if the older borrower were to pass away before the younger borrower hits 62 years old, the younger borrower has 120 days to apply for what is called as the non-borrowing spouse rule. What does that mean? They need to prove that they were legally married to the borrower. They need to send in a form of ID. They need to send in one of the utility bills and maybe one other piece of information. And then that is reviewed by HUD. And then HUD allows the non-borrowing spouse at that point to resume the reverse mortgage without any additional paperwork. So we just had a situation like that. I've been helping a non-borrowing spouse that wasn't my client back in 2008. They were referred to me by someone that we mutually know, and her husband passed away last August, and she didn't know what to do. So the 120 days expired. Next thing she knows, she gets a foreclosure notice. She goes to see a foreclosure attorney who does know nothing about this non-borrowing spouse or reverse mortgages, loses about 3 months, and doesn't get to me till about May of this year. Since May, I've been calling the lender, writing letters, trying to appeal the fact that they negated her non-borrowing spouse. And as of yesterday, it's not going to happen based on what I was trying to help them with. So I referred them to the local HUD office here in Miami for them to go directly to FHA and then present her case there to HUD. And if that doesn't work, I said, go see your local senator. Go to Marco Rubio's office and see if he can help you. Because sometimes local government officials of that stature have an inside way to get some of these issues resolved.
Needless to say, if anybody out there is considering a reverse mortgage, it would be very well worth your while to contact a specialist, somebody that knows what they're doing. No offense against my attorney friends. We have a lot of attorney friends, but unless you specialize in that and unless you've done reverse mortgages and you know all the ins and outs, Mario, you explained it very well, but I'm still confused. I still don't know what that means or how to handle it.
It's very confusing, and I'll tell you, in this latest case, the blame should go on the original loan mortgage originator in 2008 who forced the closing 10 days prior to this lady becoming 62 years old. That is the worst thing that could have been done, and that loan officer should not be writing loans, because not to be able to wait 10 days for the non-borrowing spouse to turn 62 has created a nightmare for this lady today.
Mario, if there's somebody watching, thinking about reverse mortgages, maybe asking questions, maybe going to Google and ending up more confused, folks, don't even worry about it. Mario, what's the best number that somebody can get a hold of you at?
So here in the office, 305-598-1600, or on my cell after hours, 305-588-0451.
Don't waste time. Don't get more confused. Don't go to Google and try and find answers. And definitely don't consult with somebody that does not know the ins and outs of that very intricate and difficult and confusing reverse mortgage process. Mario, you definitely have experience in that, and we want to welcome everybody to go ahead and contact you if you're thinking of going that route. Wow. I'm more confused than before. So Mario, we started a while ago. It's been almost about a year that we're doing these videos, and in that year time, we've kind of coined your we've coined many names for you, but the one that really stands and the one that people recognize you out in the street is the one-stop shop. And the one-stop shop, I feel and I kind of hear that it's becoming a national thing. Don't they know? Don't they know there's only a one-stop shop?
Well, we've been a one-stop shop since 2004. And our clients have enjoyed the convenience and the efficiency of the one-stop shop. So what's going on in the industry is that you got some large media companies that have bought out some national real estate companies, and they've also bought out some mortgage companies, and they're trying to advertise the one-stop shop concept. Not directly, but they're trying to market the convenience that our clients have enjoyed for such a long time.
Of course.
The thing with that is that they still don't have one person that they're dealing with on both sides of the transaction, on the real estate and on the mortgage. They're counting on two separate individuals, one a realtor and one a mortgage, and if one or the other lacks experience or knowledge, you're back to square one, where it can become a difficult transaction. So, there's companies out there. I mean, Fox has purchased Realtor.com, and they've purchased a mortgage company. Zillow got into the mortgage business and I think is already heading out. They see the difficulties in originating mortgages and the compliance that is involved with that. Open Door, one of those companies we've talked about in the past, they just bought a mortgage company. Will it work for them? We still don't know. But obviously they're doing this because they got to pick up business in different ways because they're large conglomerates with large overhead. So they have to find ways to bring in different revenue streams in order to be profitable because they're so large. For us, we like to stay in our little humble approach here with the boutique setup that we have, and offer that one-stop shop concept, one client at a time.
So if the wheel is not broken, don't mess with it. Don't mess with it. So the landscape of the real estate industry and the real estate market and the mortgage market is changing. It's always changed. You know, people are trying to innovate, and like you said, these big companies are getting into the game. But really, you know, as they say, often imitated but never duplicated.
Yeah.
You really cannot substitute the level of service that you and your team provide to buyers and sellers.
Well, you know, we've been doing it since 2004. We've refined the concept of the one-stop shop, the efficiencies of the one-stop shop. And, you know, even though we deal with multiple clients at a time, we can honestly say that we try to make each client feel like they're the only client we're working with.
How does that tie in to your other saying that you're a referral type business? Because I know that one ties into the other.
Well, most of our clients come by referral only.
Referrals.
And that's been the way that we built this company since 2003. So how does that tie in? Those companies have to advertise a lot to secure online leads and telephone leads and things like that. We don't do that. We basically, our leads come referred by existing clients, referral partners in the industry, banks, real estate companies, prior customers, and people that we network with.
So in a real estate transaction, in a financial transaction, a mortgage transaction, it's not only about the price, it's not about the cost, but it's about the service that you get.
Service is very important.
It's important.
And you're dealing with someone's largest purchase in their life.
Absolutely.
Whether it's the first house, the second house, or the third house, it's the largest purchase. You know, you're not buying a Mr. Coffee Pot here. You're buying a house, and it's more intricate, and there's more involved, and there's a lot of turbulences, which we're going to talk about in a few minutes. Some of the turbulences that can occur in that transaction. You want to make sure that when turbulence hits, and it's going to hit, I don't care who you are, what transaction you're involved in,
no matter if
the turbulence is going to hit. You need to make sure that you have the right people that are working with you to be able to navigate that turbulence and get you to the closing table.
Mr. Clear to Close, that's a great term. So Mario, like I said earlier, we've been working together almost a year, and we're doing these video broadcasts, and you said, I don't know too much about video, but really you've come a long way in this year. You have your own studio set up here now, folks. If you haven't been here to the One-Stop Shop studio located in Kendall, it's simply amazing. But then I find out, Mario, that you've been doing videos and infomercials for a while.
Yeah.
I found out that you have an infomercial that's been playing on South Florida Network TV for a couple of months. What's the history behind that? I thought you were a newbie at video.
So just to go back a little bit, in 2003, I used to do a live weekly TV show.
Look at that.
On South Florida television with a very popular local TV personality by the name of Tomás Fuste, who was very popular within the Spanish community.
Of course.
I was the first person in South Florida to go on TV to explain the reverse mortgage to the Hispanic community back in 2003.
Wow.
And I did that show with him for about 2 or 3 years. And then I was contacted by a gentleman by the name of Willie Riverone, who might be watching. He is a media expert. Mm-hmm. And we met, and he convinced me to do an infomercial. And we went ahead and did an infomercial in Spanish back in 2008. And Neil of N2 Productions, who does a lot of work here in the local market, we hired him to do the production. It was a 2-day production. And, we started playing it. And back in 2008, it was very successful. But when all the changes came to the reverse mortgage and regulatory stuff and condominiums not being approved, we took it off and we just put it in the archives.
Right.
And when the rules changed with FHA a couple of months ago, I said, you know what, this might be a good time to put it back on. So if you're watching this show, Saturday mornings at 10 o'clock on Channel 8, cable Channel 8, my infomercial plays from 10 to 10:30.
Telling you, when he retires from real estate, he's going to be on the big tube. You mark my words. You mark my words. You need to get his autograph now. You need to do your real estate transaction and your mortgage transaction now, so you can keep a copy of that signature, because you never know. You never know. So maybe we'll do one of these live broadcasts in Spanish one day.
Maybe we will.
For our Hispanic audience.
Well, I'm going to be doing a testimonial that I got to go to either Friday or Saturday. A client that we just closed on, they said it'd be okay to go to their house, and they're going to do a testimonial in Spanish.
So, all you guys watching, si alguien en español quiere que Mario hagamos los videos, los live streams, my Spanish is not that good either. Hacemos los videos en español y vamos a venir a la comunidad latinoamericana con los videos informativos en vivo. It's not pretty good. Pretty
There you
good.
go.
Well, a little practice.
Maybe once a week we'll do it in Spanish and once a week we'll do it in English.
Si quieren los videos en español, pongan en el comentario sí, queremos los live streams en español con Mario Quintero de One Stop Shop.
La primera parada.
La primera parada. So Mario, we've had a rough week. South Florida got spared. Our friends 150 miles away dealt with some severe turbulences over there, and they're going to be dealing with that. But in addition to those turbulences with our Bahamian friends, were there any other turbulences in the real estate market in your world here?
Oh, yeah. I'm going to talk about two of those right now.
Wow.
In fact, one of them just happened about an hour ago. And now we're scrambling to be able to fix it.
So unlike the weather turbulences that you get warnings way in advance,
No.
and you look at the radar and you prepare, a real estate turbulence can happen at the drop of a hat.
At the drop of a hat,
Wow.
and my message is here, don't take your credit for granted.
Okay.
Don't think that because you don't pay a large corporation like Uverse or AT&T or Xfinity, don't think that by not paying them that cannot come back to haunt you. We have a case here that we're about a week and a half to close, that today the lender reran their credit and popped up $180 collection by Uverse.
$180.
$180. That just killed the deal. It killed the financing with that lender. We're still going to be able to get it done, but now they're going to have to pay a higher interest rate. We're going to have to go non-QM, and we're going to have to do some things to scramble to save the transaction. But here's a situation where this individual, and I'm not mentioning any names or anything like that, but they have the money to pay that $180, or they had the money to pay the $180. I don't understand why people just say, well, I'm not going to pay this. I don't understand. Now that's come back to bite them. The rest of the credit was fine, and that one item just killed that loan.
Wow.
And now it causes us to have to restructure everything because of that lack of follow-through for $180.
So the $180 liability is going to cost them probably a couple $1,000.
Well, it's going to cost them on the interest rate now, because we can no longer go with a Fannie Mae product with a regular conventional loan, and they're putting down a lot of money on a $435,000 home. They're putting about $100,000, so they're putting more than 20% down on a conventional loan. Now they just lost the ability to go conventional because of a $180. Well, screw that. I'm not going to pay him.
To prove a point. To prove a point, I'm not going to pay him.
I'm not going to pay him.
Yeah.
Now it's going to cost them. It's going to cost them more than $180. It'll probably cost them more than $180 a month. So if you're out there, Don't do that. Don't say, well, screw AT&T, screw Uverse, screw Xfinity. I'm not going to pay him the $60 because I don't feel like it. Don't do that, because it could come back to haunt you.
Wow. And that, of course, you didn't have any warning of that. That's just the world of real estate and mortgages that, bam.
That happened in June, and it didn't appear till the credit was run now in September, because it takes a month or two for that to show up.
Right. Wow. Lesson to be learned, folks. Lesson to be learned. Any other turbulences?
Yeah, we had another little turbulence where we have a borrower who legitimately built a shower in a garage that he doesn't use.
What?
He built a temporary shower in a garage that he doesn't use the garage. He put furniture and a shower in the garage because he had open heart surgery.
We are in South Florida, though.
Right. And he, in order not to walk up the stairs of where his shower is located, during his recovery of his open heart surgery, built that shower. Well, he decided to keep it as a permanent shower. And, we ordered the appraisal. People came in, and he had two options. Either permit the shower through the local municipality or tear it out. So he decided to tear it out, and now we're going back to do the reinspection so that we can close that loan. But, if you're going to do work that is unpermitted in your home, just understand that at some point there's a great possibility that you're either going to have to knock it down or you're going to have to get it permitted. And I got to tell you, getting something permitted after it's built is very expensive and very difficult to do. And we see that all the time here in Florida, especially South Florida, where people, once again, they have the attitude, what the hell, it's my house.
I'm a contractor.
Yeah, I'm going to do it.
I have a shovel and a wheelbarrow.
I'm a handyman. I can do this.
Yeah. And they do. They do it.
Oh, no, it's all over the place.
Yeah, they do.
And what happens is and this goes out to the people that might be looking to buy a home, when you go buy a home, make sure that the number of bedrooms and bathrooms that are in that home match the legal description in the county records. So if you go in and it says 5 bedrooms, 3.5 baths, go online, check the county records, and make sure it says 5 bedrooms and 3.5 baths.
Great point.
If it says anything else, and you are able to get that loan closed and move forward with the transaction, you just bought
that responsibility
and a future problem, because it's no longer the responsibility of the person that sold you the house.
Gone.
Once you close on that house, it becomes your responsibility. So just be forewarned.
So I've heard rumors, being a South Florida native, that houses like that are modified without permits can only be sold via cash. In other words, somebody goes in and offers whatever.
No. We just had another turbulence that we were able to navigate. The people bought the house in 2006 or 2008. They bought it as a 2-2. Okay? 2 bedroom, 2 bath. Even though the multiple listing and the county said 2-1.
Okay.
Talking over 10 years ago. And I pulled the original MLS listing just to see what it was sold at.
Right.
And in the listing it said being sold as a 2-2, legal description 2-1. So that's how the realtor covered themselves, by putting that it was legally a 2-1, even though it was being sold as a 2-2.
But then the buyer assumes that problem.
Well, they assumed it because we just went in and did an appraisal, and the appraiser wanted part of the second bedroom to be knocked down or re-permitted, or re-permit the second bathroom that wasn't part of the legal description.
Wow.
And I got to tell you, it wasn't easy. We finally got through that because we kept explaining that this should be a grandfathered situation, that so many years have been gone through, and we showed them the MLS and all
So
that.
is that an option to have a property grandfathered whenever those changes are made?
To be honest with you, we got lucky on that situation.
Okay. So how our Cuban friends would say, tremendo arroz con mango.
That was an arroz con mango.
Tremendo arroz con mango y plátano maduro un poquito ahí. Wow. Unreal.
So, once again, when you go buy a house, make sure that the number of bedrooms and
Matches.
the number of bathrooms match what the county says for that property. And all you got to do is go to Miami-Dade appraiser, go to the page, put the address in, and see how many bedrooms and how many baths. If it doesn't match, you're buying a problem.
And ladies and gentlemen, if your spouse, if your wife or husband says, I'm a contractor, I got a shovel, and they want to add an extra room, be sure you pull permits, because si no te metes en arroz con mango that Mario just explained. That's just a little teaser for our next Spanish podcast. We're going to be talking mucho en español ahorita pronto aquí para que ustedes entiendan. Wow, tremendas turbulencias. Is that even a word? Turbulencias.
Let me tell you, see this gray hair here? Now you see where it comes from.
Mario, never a dull moment, man. I've been working with you for a while and always learning, always learning. Folks, if you're looking to buy a property, you're looking to sell a property, if you just paid your rent check about 6-7 days ago and you're scratching your head, why am I doing that? Well, we ask you the same question. You don't need to do that. You just got to call Mario. Call a one-stop shop and let him show you how you can get out of that rental commitment, and you can put that money toward use. You can grow. You can invest in yourself, in your family, in your future, and stop throwing away that rental money. People still doing it.
Mm-hmm.
People still doing it. You know. So if you're renting now, contact Mario, the one-stop shop. Let him talk to you. Let him show you how easy it can be. If you don't have any money for a consultation, Mario, do you charge anything?
No charge.
There's nothing I got to give you for you to guide me in my real estate process?
No charge.
Wow, folks. Check that out. Mario, what's that phone number again?
In the office, 9 to 5, it's 305-598-1600. And after hours, 305-588-0451. Or you could text me, or you could messenger me like a lot of people have been doing lately.
Oh, we're going to be talking about that soon.
A lot of clients have been messaging me after hours through the Facebook Messenger and working. That's how I've been starting to work with some clients now. So whatever is comfortable for them. So
Mario, I see a AI chatbot in your future. We'll talk about that later. We'll keep you guys posted, folks. Folks, first time watching us, my name is Andy within South Florida. Mario Quintero from the One Stop Shop, the original One Stop Shop, often imitated but never duplicated. Be sure you're dealing with the original One Stop Shop for all your financial and real estate transaction needs. We're going to tell them about next week, or we're going to keep them in suspense?
We're going to keep it in suspense, but don't forget, this show is produced by Mario's Home News.
MariosHomeNews.com.
And if you feel that what you've heard today is of value to you, or maybe some of your friends and family, feel free to share this video and keep your friends and family informed.
Share the love. You never know. The person that receives your share or your comments, they might be in a process, in a financial situation, in buying or renting or selling. And just by you sharing this content, you place them in contact with Mario using a referral system, right? Social media is a referral system. And that may be a life that you affect and a life that you make for the better, because they'll be able to avoid those 78, 80 turbulences that Mario talks about in his video on MariosHomeNews.com.
88 turbulences.
88? Have they grown?
Yeah. 88.
88 turbulences. Folks, Andy, thank you for the love. We'll talk to you guys next time.